Hello, everyone. Welcome to our live analysis. So the very first, actually one of the first, releases of the year, economic releases of the year. It's a U.S. inflation day. So for anyone that is up to date and has seen what we suffered, I'm gonna say the last quarter of the year. With the delays of economic data, all this uncertainty around the economic growth, the US growth, the European growth, etc. You know how important today's release is. We had seen NFP just a few days ago, and now it's the second key release from the US that could actually clarify or clear the picture around the Fed next action, even though we have seen other uncertainties such as Mr. Powell's testimony and everything that's and Trump accusation, so driving the market and the concerns around the Fed independence are like the main factor currently of the market. However, from fundamental perspective, we need some clarity to see where the data point the Fed. I mean, what the data what we're gonna see today will clarify whether we're gonna see the Fed rate cut this month or the month after, or next month or February. So so we have plenty of time until the US data are out. It's 30 minutes. So I started the live quite early because I want us to go through the charts. Feel free, as I keep saying, to ask anything you want. Hello, Sprint View, welcome. Feel free to ask anything you want. I'm here to help. So ask me anything, fundamental, technical. If you want me to analyze a particular asset, let me know in the question box, basically on the comments below, and I will be able to reply on spot. Now, before we start, I would like to go over basically to see what is expected today, okay? To go through what is expected, because this will help us basically understanding or having actually a hint on how could the US dollar move based on the data, on a surprise or a miss of expectations. So regarding today's reading, guys, basically, we are expecting the forecast currently is that the inflation on a monthly pay basis will remain unchanged. However, we're gonna see a slight increase of the core inflation. And regarding the headline, the year-over-year basis expected unchanged as well. So in general, a pretty flat, in line with expectations, in line with last month's reading. This is what is expected. So flat and quite steady inflation. However, you know that data tends to surprise us, right? So we cannot really tell until the data are out. But if indeed the data deliver a 2.7 headline and 0.3% monthly percentage, all these actually, which is widely expected from the economist, even from Bloomberg as well, this could basically push, let's say, the Fed to hold the US interest rates steady for this month, for January only. However, overall, you need to have in mind that we are expecting two more rate cuts from the Fed by the end of the year. But we are at the beginning of the year, we have plenty of time. So if the inflation data today comes in line with expectations, then at least for this month, the Fed is expected to keep rates unchanged. Okay, sorry. And this is something that will be quite key for the Fed. Why? I would like to remind you that in November's report, we have seen inflation falling much more than what we were actually expected. So it missed expectations significantly and surprised the market. And okay, there was a bit of a warning. There were some warnings from the economist analyst that the particular report, the November report, it was expected to be like that because they were missing some important data due to the shutdown, the Fed shutdown. So also, so that was what happened back to the November's report. But this time today, the data should be, we have actually, we don't have any missing data. Everything is already published. So now we're going to see the actual inflation reading for the last month. And as I said, if it comes in line with expectations, that will give the room to the Fed to keep rates on hold at least for January. So that's why we might not see dollar changing its path. We might see it continuing continue this consolidation that we have seen so far this week, but also so far today we have seen some rebound ahead of the data, but slight rebound. So it still fails to extend above 99 levels. So currently it's at 98.70. I'm going to show everything in a bit. What else I would like to mention? Basically, you know what? Let's shift straight to the chart. Okay, I can see some questions. Here we go. Gold. Okay, gold, guys. This live is in English only. Okay, if hopefully you understand me, but if you want a live streaming, want to see our instructors in your own language, you need to follow our Facebook pages. Okay, our analysts all around the world are going live in the Facebook, okay, or Zoom. So check our social media. If you are in Thailand, if you are in Indonesia, if you are, I don't know where you are on the world, we have Facebook pages, and our instructors are providing every week live streamings in their language. So I don't understand what you're writing. Okay, so I can see some are asking about gold, obviously. Good. Let's start from gold. Anyway, you have seen the news yesterday, and you have seen how it performed so far today as well. Now everyone is calling for the possibility of hitting 5,000 level, another record high, especially after the rally that we have seen on Friday and yesterday as well. Today, gold, this is gold, guys, okay? Gold, this is gold. Let me just, I cannot advise you what to do. I can analyze it. So be very careful what I'm about to say right now. I'm going to put also the ticker so you can see and follow me. Okay, here we are. So we are covering gold. This is the 1 hour chart. As you can see, today so far, it has been a bit on the sideways. Obviously, the markets are waiting for the data. That's why it's a bit flat, consolidating so far today, right? And the reason is that the expectations of the US data. But in general, gold is well supported, and a lot of analysts, economists, and consider the momentum. Now the expectations turn to the possibility of gold reaching 5,000 territory in the very first, in the very first quarter of the year. Now, let's focus on what we are seeing right now, today. So far, it has been really steady, as I said, because we are waiting for the data to come out. But in general, uh, overall, gold is well supported and is expected to remain well supported, not only because of the data, not only because of the fact that the Fed is expected to proceed with 2 more rate cuts this year. This has already priced in. This feels like old news, let's say. The support is coming from all this ongoing geopolitical tension, all this political uncertainty. Okay, obviously, data will help us to see whether there is a furthermore upside momentum, and it could actually add to the existing rally. But overall, the main drivers of gold is geopolitics. Mr. Trump once again monopolized their interest. Obviously, the Fed could affect the gold as well, and whether it's gonna be sounded hawkish or dovish in the next meeting, because so far we have seen some hawkish comments from the Fed, from Fed members to be more precise. But I think it was John Williams on Monday. Yeah, it was John Williams on Monday stating that the central bank does not face any near-term pressure to change the monetary policy. So this is a hawkish comment. But yeah, overall, the driver is the politics, the things that there are so many things going on all around the world, especially with what happened with Fed Chairman Powell and Trump, and now all the global central bankers defend, obviously, Mr. Powell. Just I don't know how many of you are aware, but yesterday, over the weekend, let's say, there was a launch of a criminal investigation into the central bank chief, Mr. Powell. Criminal investigation. You understand how big this is. So obviously, all his colleagues, global central banks all around the world, they have supported him, and they keep supporting him. But this was an information that shocked the markets, and that's why the markets turn to the safety of gold, to the safety of Bitcoin, even Bitcoin, to the safety of silver. Silver is also very interesting. It has been the whole year, last year, or the last 6 months has been on our spotlight as well. But yeah, because what happened with Mr. Powell in the criminal investigation into the chief of the Fed turned investors and general market participants into the safety of gold, because it raised concerns regarding Fed independence, regarding central bank independence. Okay, you remember that the independence of such an institute of central banks is a cornerstone of price, financial, and economic stability. Okay, they are serving the citizens, they are serving us, and they defend, and they're trying, basically they defend the economy. They're trying to keep the economy stable. So having these concerns regarding Fed independence, it's something huge. So this criminal investigation um add concerns regarding the Fed independence with Mr. Trump on board, unfortunately. And this is what is one of the main factors that we have seen gold rising to all to another record high earlier this week. Right now, it's steady in the short term, but as I said, it's just on the anticipation of the data in a bit. While we have also other stuff from the geopolitical perspective, we have Russian forces launching missile attacks. I mean, continue the missile attacks in Ukraine today. Actually, this morning, we have Mr. Trump all the time on the news, threatening again and again, threatening Greenland, threatening also Iran. So it stated that Iran will face a 25% tariffs on trade with the United States. All this just keep adding on gold and silver. That's why the outlook for gold and silver in 2026 is positive. So what else? So let's see some technicals for gold until the data are out. Very narrow range the last for today. If I focus on today's performance only, we are here is when the Asia market open, so it's pretty narrow range. Obviously the 4604 level is our immediate resistance levels, is very tight, but because I know that some of you are scalpers, and in general 5-minute trader, 1-minute trader, yeah, this remains the ceiling. Okay, actually let me place it, let me just correct it. Let me be precise, sorry for that, just a second. Yeah, oh good, 4606 to be more precise. So that's the ceiling. This could, this it's already, I mean, gold already in the very very short time from such as a 15-minute chart is already giving some indications for a rally. However, this is just this is looks a bit limited for the time being because the data are not out. You can see that there is an identical high, so it's more of a consolidation until the data are out, and for another 10 minutes at least until we have the data out. So I'm gonna return back to the 30 minutes chart. Okay, but nonetheless, guys, I mean, there is no real ceiling here. This is what I'm trying to say. There is no real ceiling in gold. Yes, indeed, there is a ceiling, there is a resistance also at the record highs that we have at 4630, but the momentum in general, overall, not in the 30 minutes chart, if I go higher, overall daily chart, 4-hour chart, etc., is positive. It continues being in a rally. It continues being in an uptrend. So let me just clear a bit this mess just to make it simpler. I don't need all this. You see, these are high Kanashika candles, so they help us see whether the week, the month, the day is positive or negative. And we are in a consecutive, we're getting consecutive positive candles, no tail at the bottom. So that's no bearish indication. So it's just a constant rally. This is what is the case right now. Obviously, we need to wait the data for the data to be out. But overall, have in mind that gold expected to remain on the upside, and there's a positive. It's a positive. Has a bullish outlook. Well supported. Yeah. So further rally today on the announcement, it could hit basically if inflation today comes in line with expectations or slightly, let's say, lower than what is expected, then this could add um, further room to the upside for gold. And basically and dollar could be seen slightly lower. So there's not the only thing that data will do today is just to determine the extent of the Fed policies in this year. We are well aware that this month they will not cut interest rates. So this has already priced in. Actually, even the two rate hikes, the rate cuts, of the year have already been priced in. So we might not see a big reaction today, especially if the data come in line with expectations. Only a surprise could shift, could affect the markets today, could affect dollar or gold, okay? Because already everything has been priced in, so only surprise could shock the market, let's say. And in the bigger picture, the Fed remains dovish, so we would need more solid, stronger reasons that could make the Fed and the market participants believe that the Fed could consider even hiking rates, which is not the case now. For now, the worst case scenario is that they will hold rates higher for longer, just for January, okay? We are data dependent, so we are checking month by month and so on and so forth. So, and anyway, the Fed has already signaled that they're gonna pause interest rates in January, so that is done. It's a done deal. That's why we may not have a really significant volatility reaction today on the US inflation. However, so long story short, for gold, resistance, immediate one is on the latest high. The next resistance is at record highs, 46.30 territory, while on the flip side, the 45.72 level is the immediate support. With if it fell, I mean, if it extends for any reason and we got a surprise or something, and we see the gold drifting lower, then the actual support is way lower, and it's down to 45.13 territory. 45.13 territory. There was a very interesting report this morning yesterday from Morgan Stanley, and actually Morgan Stanley forecast that indeed, yes, the inflation will come at 2.7% in a year-on-year basis, but they have forecast a slight increase in the monthly basis, very slight increase, 0.37 to be more precise. So that would be a 0.07% increase. So if we get even a tiny, slightly higher inflation, um, this could um, let's say, indicate a clear rebound in price pressures um, after the soft punch that we have seen in the last months. But yeah, that could potentially, let's say, indicate disinflation, but that's not the case anymore. It's just assumptions and some like warnings, let's say. So that's not the case for the time being. Yeah, along with the inflation, we're gonna have ADP number as well, the weekly one. But yeah, the main event is the inflation. So, what though? Let me see the questions. And I'm gonna jump to euro dollar as well because we are like 4 minutes away from the data. No one asked about euro dollar, even though it's the one of the majors. It's a number one major actually asset, and we have already seen some decline ahead of the data. It has the euro. This is the 1 hour chart in euro dollar, guys. Euro dollar, euro dollar, euro dollar, and we have seen, interestingly, the asset just now. I'm going to put the 30 minutes chart just now, breaking the support of the week. Okay, the 1650 territory. Sorry, 152 to be more precise. So it's extending lower. The momentum, okay, is flat, is neutral. The stochastic, though, are bearish, pointing to that there is further room on the downside. So you need to keep an eye on euro dollar because it looks that it will, it has some volatility ahead of the data. The next support, I'm not quite happy with the 116.40. I'm not so happy. Where's my navigator? Come on, quickly, quickly, quickly. We're running out of time. Bum, bum, bum. I would like my fractals. Where's my fractals? Fractals. Here we are. I'd like my fractals because I would like to add the Fibonacci extension, the short-term one, but also this one as well. This will help and give me some immediate support levels. You see, 114.40, 116.40, 116.30. That's for the short term. For anyone that is a scalper, intraday trader, a short-term trader in general, there is some negative bias. The asset is flirting and actually is below the lows of the week. So the doors are quite open for the lower levels, the lower 116 territory. So keep an eye on that. 2 minutes to go until the data, less than 2 minutes to go until the data are out, actually. So there is some slight dollar strength ahead of the data, but it's limited. It's expected to be limited because, as I said, everything has been priced in already. Okay, so unless we have a huge surprise, but I don't think so. What else? Okay, let's wait a bit. Let me see whether you have any questions. Oh my God, you are actually right. Who is it? Carnegie. Guys, hopefully you know. I thought I took that for granted, but inflation or otherwise CPI or whatever you want to, inflation is the indicator that presents, that show us the increase in the general price level of the goods and services in a particular country. So it gives you an indication for the economy of that country. Whoa. Guys, sorry, excuse me. Excuse me, because can you see that? Let me see the data. Let me see the data, because we have a huge rally. There, the euro returned back to 116.70, so it missed expectations. Whoa! So, headline unchanged, monthly reading unchanged, but the core inflation, basically, sorry, let me see the breakout. Sorry, just a second, just a second. The headline missed expectations. So we had the exact opposite of what we were expecting. We were expecting a slight increase, but instead, we got a lower, a miss of the expectations for the core inflation. Core inflation is the long term, let's say, long term trend of any price increases in the goods and services of a country. Basically, we are excluding the energy and the food. So the analysts, the economists that they are calculating inflation, they are excluding energy prices and food prices. So this provides a clear picture for central banks. The core inflation actually is important because it's for central bankers mainly. It gives it provides a clear picture for the central banks to understand whether we have a persistent inflation pressure or not, and is what they are looking to see in order to decide their next move, how they're gonna formulate the monetary policy, and so on and so forth. So it helps. Core inflation helps them distinguish between the temporary short-lived price changes and the broader inflationary trend. So the fact that it came a little below expectations is important, because that means that it leaves the room to the Fed not to pause interest rate cuts, cuts in January, but also next month as well. That's why we had this response. Okay. Interesting. Interesting. Very, very interesting. That I wasn't expecting something like that. So let me see the questions. So I would like to remind you that, as I said, 2 more rate cuts are expected. So even though the market is still betting on these 2 rate cuts, it has priced in all these 2 rate cuts. The very first one is expected in June, okay, based on the data, the employment data that we have seen so far, the latest. So the expectations are that the first rate cut of the year from the Fed is on June. So right now, today, the inflation basically determined the extent of the Fed policy easing. So that means that brings into the table the consideration of rate hikes as well, which wasn't the case so far. If inflation continues slowing down, instead of rate cuts, we might see rate hikes. So today's reading has put back into the table rate hikes consideration. Very premature to say, but have this in mind. Yeah, okay, I wasn't expecting something like that. But it is what it is, right? We have euro dollar jumping to 116.70. However, momentum is still negative. I'm checking the stochastic over here in my short term, still down, weak. There is a bit of a rebound. Um, Mainly, I would like to cross this line in order to suggest that there is further room on the upside. MACD is negative, and this candle will close in 10 minutes from now, so we have plenty of time to see whether it was just an instant reaction and is not the real direction. Because if we consider, if we consider the data, the fact that the data slow down, so we have lower inflation than what was expected, that means that it's like it's signaling to the Fed that, you know what, you don't need to do anything else. Keep the rates unchanged for longer. So it's like it's postponing any rate cut that we were expecting this year. And it's not only that. So this could be bullish. Okay. Let me see something. Let me see. Yeah, dollar. Okay. Okay. Let me see the news feed to see if I have any further breakdown for the inflation. Here it is. Oh, no, no, no. Yeah, guys, I'm gonna share the Fed watch as well because the odds have changed. Let me see. Can you see my screen? No. Let me replace the screen, entire screen. Here you go. Over here, I'm sharing the Fed watch. So here we go. Oh, just a second. Sorry. Okay, this is the current month, but I'm jumping to March. So okay, still for the first quarter, the odds are for no change in the interest rate. And in June is when we have the first cut of the year. But as I can see over here, there is a slight change from what we saw this morning. So let me just say something. Okay. Okay. So I have seen earlier, let me get rid of it. So I have seen earlier, guys, that the markets were expecting where there were basically priced in two rate cuts, sorry. So 52 points in total. Now, due to the data, due to the inflation, we got the easing from 52 points rate cut increased to 57 points rate cut for now, based on the data. So basically, what we saw right now is more of a dovish reaction, okay? More of a dovish reaction, and that's why we have seen dollar over here dropping, euro dollar rising. Let's see stocks. Okay, rising, stocks are rising. Let's see precious metal. Let's see our gold increasing, breaking the ceiling that I mentioned earlier. And I guess based on what I have seen so far, the yields are dropping as well. So, uh, uh, basically, what today's reading confirms, other than the fact that the Fed is not going to change anything anytime soon, and at least they're not going to change much with the fall, because we have a falling inflation. I mean, it's a falling inflation. It's like it's telling them don't do anything, because the economy is okay, strengthening slowly, slowly, gradually is strengthening. So what we have seen right now is basically, other than that, is also confirming that that the number, the report that we have seen back in November, when the much lower than expected numbers were taken, it was due to the shutdown only. It wasn't. So yeah, the data confirm that the easing seen in November, when the much lower than expected numbers were taken, with a pinch of salt, due to shutdown related issues. So, hmm. So that was so that there was some interest in today's reading, but I mean, nothing changed dramatically. Gold continues on the upside, broken what I showed you earlier. I think I showed you this chart. Yes, I showed you this chart. Broken at the high of the day, extended higher, bullish high Kenashi candles. Let me just, because I'm back to gold. Yeah. Broken it, bullish candles, parabolic Sarah bullish as well. Stochastic is bullish. It is what it is. And it's further on the upside. Ceiling is on the yesterday's highs. There is no indication of a reversal. So bullish gold on the data. A bearish dollar. Where is it? Bearish dollar. Already broken the support of the day and the week. However, this candle has not closed. It will close in 3 minutes from now, so it's unlikely to see extending lower. It's expected to remain above it. Okay, it's expected to remain above it, like possibly consolidating. What about euro dollar? Yeah, jumped but struggling to sustain these gains. And you see, remember with the trend line that I showed you earlier, the stochastic hasn't managed to break my trend line. So this boost could be limited. Okay, could be limited. Let's see. Let me see your questions. Yeah, not so interesting, but that was a nice move, intraday at least. I mean, the short term at least. I'm very good, Adam. Thank you very much for asking. I can see there is a small society over here. You discuss, there are some several jokes between you. That's nice. Yeah, sorry for that. I'm keep speaking, talking. Sorry for that. Euro dollar. Buy gold. What time is inflation? So, well, a lot of questions actually. Sorry, I'm just trying to see your question. What questions? Guys, you need to consider. I had a webinar earlier about the outlook of 2026. So you need to be well aware of what is expected for the entire year. Okay, just to to spot the overall trends, to be aware of the overall trends, and just to show you, to say to you very very briefly, dollar for 2026 is expected to be neutral to bearish. Gold is expected to remain bullish, and not only gold, silver as well. Silver is very interesting. I'm going to jump into it in a bit. In general, the commodities are expected to remain well supported, excluding, let's say, uh, oil energies. Energies are expected on the downside. Euro dollar is expected to be bullish. Pound dollar, the same. Euro pound as well. So you need to have a sense of the overall forecast for each of these assets and the reasons that and the reason behind this outlook, the positive or bearish outlook. Okay. So, okay, we have seen the return of euro dollar back on the downside. It was expected that it should be a limited move. Yeah, we have seen it because stochastic failed to extend and momentum is overall bearish still. Okay. Okay, let me see the questions one more time because I think I've missed something. Okay. So a very nice question from Aaron Malik. So Aaron is asking, so with this data, we think the Fed will not cut interest rate. What does that mean for the price of gold and dollar? Okay, very good question. So based on this data, is not we cannot like say that the Fed will not cut interest rates, but for sure is let's say confirms that they will not happen in the first half of the year. Okay, it confirms that. It also confirms the November report, because with the November report we're a bit skeptical that it was remember November, it was basically the average of 2 months. So it wasn't because of the shutdown. So we couldn't rely on that report. So now the fact that for a second release in a row, we have seen lower inflation indicates that the monetary policy is okay for now. It works. That inflation is slower. There is a gradual US growth in the economy. So it works. So it's not that it's running out, really, I mean, it's taking off the table completely the rate cuts, but it confirms that it will not, it's unlikely to have a rate cut in the very first half of the year. So it's likely to postpone it. And it also gives a hint, just a hint, a slight hint for now, for the possibility at the end of the year to see a hike, which was not the case anymore. So far, sorry. So, what does that mean for the price of gold and dollar? For the time being, in the short term, it doesn't really change the short term outlook, to be honest. Okay, doesn't change in general the overall outlook for the moment, because the rate cuts have been priced in, and the hike is just a slight indication for now, without not a solid something solid to support the possibility of a hike. So it doesn't affect the direction, the bias of gold or dollar right now. So gold remains I'm going to get back to the gold. Remains on the upside because of the political, geopolitical reasons, risks. The dollar remains neutral to negative. Okay, again, sorry, again, sorry, just let me drink some water because again, due to politics. Okay, it's a safe haven. Remember, so the political risks, the debt sustainability in the US, the yield differentials as well. There is a deviation between Fed and the rest of the world. These are some of the factors, some of the reasons. So the spending as well. Sorry, I forgot about the spending, the US fiscal excesses. This doesn't change the overall neutral to bearish outlook for dollar. So if I put the weekly chart on, just for you to see, okay, the entire second half of 2025, it was moving sideways. So actually, let me clear this mess. And I'm gonna, okay, nice clear chart. And you see, this was the performance the past 6 months. So basically the asset, the dollar, consolidating between 96 and 100 territory. So this is expected to continue for the entire year. Because from the one side, yes, we have progress. We have inflation down. We have a bit of a postponement of the rate cut. So this could support the dollar, but still we have 2 rate cuts expected. Even though if we have a slight hint about the possibility of a hike at the very end of the year, we still have before that, we still have the 2 more rate cuts in play. Plus a lot of risks that pressure the dollar. I'm referring to the trade deals, to the threats from Mr. Trump, to the soft labor market. The soft labor market without much higher unemployment is also still weighing on the dollar. To the dovish of the Fed members also pressuring the dollar. The only thing, just to be clear, that could change the outlook for dollar, because the outlook is neutral to negative, as I said. So it's expected to stack to continue within this range to 96 to 100. So bouncing within this range. The only thing that could be a game changer for dollar, it will be the labor data, guys. I'm afraid labor data, the unemployment. Of course, if it is combined with more than expected accommodation from the Fed, this is something that could be a game changer for dollar. So let me see your questions again. Where is your questions? Yeah, but strong dollar isn't coming back anytime soon. Not with the data that we have seen so far. It doesn't. And especially with the trade tension, like being one of the key uncertainties. Trump is threatening for Greenland, is threatening Greenland, is threatening Iran as well. We have replies and aggressive responses basically from China, from Russia. So you see the trade tension is still on. It's expected to continue. Mr. Trump attacks Fed. All these, they have caused the dollar. They have basically, the dollar has managed to all these things that are going on around. The dollar has built a greater resilience to such risks. And that's why um, that's why there is no room on the upside. All these risks, geopolitical risk, have put a ceiling on dollar for the year. That's why we are expecting that it will either stuck within that range or slightly depreciate. Yeah, this is what it is, and because the cash are moving away from dollar elsewhere to Bitcoin, dollar yen, dollar Swiss, to gold, to silver, to copper. Um, so also there's a lot of hedging uh, flows causing cash flows out of dollar elsewhere. So all these are keeping the dollar fundamentally under pressure. Yeah, I'm afraid. Plus the US debt is also something that adds to the weight on the dollar. Now, let me see your questions one more time. So it's from a technical perspective, intraday at least, guys. This is dollar index, by the way. 30 minutes chart. There was a gap down. It wasn't sustained. 98.71. So basically reverted the gains that we saw before the data. But again, it's like directionless. It's flat. It's steady. So anyone that wants to trade in a tight time frame, in the 5 minutes chart for dollar index, your support is at 98.67, because I consider also my triple fractal over here, and at the top is the latest fractal 98.78, 98.80, just in the very, very short term. But it looks directionless. It looks like it's going to consolidate for a while. Uh, I don't have any. I don't have an advice. Invisible infinity. Just my advice. It would be to always do some risk management before any trade. Set your target levels, predefine your target levels, predefine your stop loss level, predefine your entry, do your homework. This will save you from any news related volatility, any noise. But regarding gold, if you have found a strategy and it works for you, rely on it. I mean, there's nothing to say. For example, I have one of my strategies is Heiken-Ashi candles, using Heiken-Ashi candles for 15, 5 minutes chart, even 30 minutes chart. And it looks just fine, because in the beginning of this live, we said that there were 2 consecutive bullish candles without any tail at the top, indicating that the rally will continue. And indeed, this is what happened. We haven't reached the ceiling yet, but it's still well supported. No tail at the bottom, indicating reversal, indicating, so there is further room on the upside. We know the general forecast for the assets based on what the data indicate. I mean, what it means. What it means if the inflation is lower. It means that the Fed, the central bank, doesn't need to support further the economy with lower interest rates because it managed to stabilize, let's say, inflation. And what that's supposed to mean? It means that we're not going to have any time soon interest rate changes. So that means that there won't be any further depreciation of dollar. But I mean, you go along with the theory. You're trying to interpret the release to see what it means for the economy, what it means for the central banks, so and to understand how it could overall affect the asset. However, that is not always the case. So, so I mean, if you are a 5 minutes trader, this is not something. This is not changing your intraday setup, right? It will add some noise, but it doesn't change the overall direction of the asset. By overall, I mean in the daily, weekly, and monthly. If we are in an uptrend, this data and these releases will not affect the long term trend. So if you are like a scalper, a short-term trader, this is just the no. This is just some, let's say, um, news noise. If you are a short-term trader, you just need to rely on your technicals, on your support, resistance levels, signals, indicators, not on the news. But if you are a day trader and a medium-term trader, then yes, you need to understand how low inflation could affect the dollar, how high inflation could affect the dollar. But I remind you that it's all about perception. Markets move based on speculation. So they are moving ahead of themselves. So that's why the reaction is not always in line with the data. Okay? Silver, yes, yes, yes. Thank you for bringing that up, Joseph, because I wanted to. Yeah, nice, clear breakout in silver, guys. Can you see that? Nice, clear, beautiful breakout. Moving average pointing to the upside. I'm using high Kenashi as well over here. This is silver. Please kindly respond. I think I did, no? I think I did. Yeah, just now. Okay. You no, it was Aaron that mentioned. Aaron mentioned the silver. This is silver, guys. Do I have silver somewhere? I'm gonna type it. Silver. Just silver. It has been an impressive year for the 2025 had been an impressive year for silver. Yeah, I know it's in line with the gold move. Yes, indeed, but it's even more volatile than gold. You see a nice breakout over here. All moving average are pointing on the upside. Momentum is positive. Parabolic SAR is positive. Big high Kenashi candles indicating that there is further room on the upside. So what that means, how you can find the next resistance levels. Use fractals, for example, like I do. Connect the latest swing high. So already breached the 100% Fibonacci extension. So the next resistance is at 93.60. 93.60 for the day, just for today. If you want a short-term, even tighter resistance levels that you can potentially use as target levels, use Fibonacci if you want to. Use ATR. Use anything that is on your strategy. So the next immediate resistance for this was nearly touched but not broken, 87.93. and 90.73 is the very next resistance level. So use pivot points. Let me use my pivot points. Why not? Let's see. Where's my pivot points? Here. Okay, perfect. So already breached and broken the first resistance of the day. The second resistance of the day, based on the pivot points analysis, is then round 90 territory. So that depends on what time frame are you trading, what's your strategy, and so on and so forth. Hi, in order to yes, well said, connected empire. What you need to do every morning, scan all your charts in a weekly and daily basis in order to spot the overall trends, the overall momentum. Is it overall in an uptrend? So because this will help you with your strategy as well. Because remember, trends are our friends. So if we are well aware that this asset for 5 months in a row, for the whole month has been on the upside, it has been is in an uptrend, then we might think twice before entering a short entry and go against the trend. Okay, whether you're gonna use exponential moving average, or you standard, or the simple moving average, or you're gonna use other, or you're gonna use price action analysis, it's up to you guys. It depends. You use, if you're using indicators, you use only the ones that make sense to you and they help you read the market. Okay, there are people that they use poor price action, no indicators at all. So this is up to the discretion of each one of you. Anything that makes sense to you, anything that is easy for you to understand and read. Okay, okay, depends on the strategy, on the time frame, dear. For I don't know whether you are asking me or you are asking connected the empire, but I kind of like the Heikenashi setup that I have for scalping, scalping. So 1 minute, 5 minutes chart, even 15 minutes chart for scalping only. For intraday, I have different setups and different approaches, mainly breakouts, and crossing of exponential of moving averages. If I'm on an intraday basis, I have seen something, an opportunity in the intraday basis. So for 1 hour and 4 hour charts, I'm using this setup. Let me show you. Here we go. Here we go. Proper Japanese candlesticks, 9 and 5 exponential moving average, stochastics, and RSI. So broken my immediate resistance. So it's a bullish indication. Moving average are pointing higher. Stochastic also bullish. RSI also bullish. So next resistance at 90, round number, with stop loss slightly below the first resistance of the day. So it depends. There are many strategies, but this is just mine. I mean, you might have a different approach. Also, this depends on your risk management conditions. Are you in what risk and reward ratio are you using? What's your goals every day? Is your goal to increase your profits by 5% every day? What's your limitations? No more than 5 trades a day, for example. No more than $100 to be traded every day. So yeah, so that's there is not such thing that such as must use. First of all, Joseph, you need to find out what kind of a trader you are. Are you a trader that finds fascinating uh, to trade in a 5 minute chart? Or does it makes you stressed, anxious, right? So you need to find out, first of all, what kind of a trader you are. Are you a day trader because you find the short-term trader, the scalping, too stressful for you? Are you a swing trader? Are you a scalper? So you need, first of all, to understand what kind of trader you are. And then by trying different setups, different strategies. I mean, we have demonstrated a lot over the years in our past webinars. You're going to see a lot of strategies, a lot of different setups. You can try in a demo account as many as you can until you find the one that works for you, that is in line with your, it meets your personality. You understand it without a lot of without spending a lot of time on the charts. You see, okay, I have a crossing of EMA, yes, that's bullish, stochastic agree, okay, let's go. So you need to try several setups and several strategies in order to find out what works for you and what doesn't, what is your style. Okay, so you said 1 hour and 4 hour setup. For at Andria, the exponential moving average 5 and 9, along with stochastic and RSI at the bottom, they're quite useful for 1 hour and 4 hour trading. For me as Andria, obviously you need to do your homework. You need to find the ceiling, you need to find the support level. So we did find earlier, you remember that the ceiling was at 86 because it was a repeated area that failed to break. The support, it was at 83.26. So we knew that these are our barriers and that any breakout above or below those barriers could indicate bullish or bearish position, short or long position, could trigger a long or short position. Now, regarding where I'm going to place my target or stop loss, that also depends on my risk and reward ratio. Okay? So if my risk and reward ratio is 2 to 1, that means that since my target is at 90 level, okay, then that's 240. So my support will be, if it's a 90 and I have risk and reward at 1 to 2, that means that, come on, that the stop loss should be around 86.35. So there are a lot of things that you need to consider. You need to write down a journal, write down your goals, write down your capital and how much you're going to risk every day. Because if you say, for example, I want to trade only $20, $50, whatever, every day. If you have reached that level, you shouldn't take another trade that particular day. You should wait for the next day. So put some limitations, put some limits. This will help you with emotional control, getting discipline, and in general, having a most risk management approach. I understand that you're a beginner, so spend some time on our webinar page. See strategies that we have demonstrated, setups that we have shown. See how you can keep a journal, a trading journal, in order to have something to start with. I mean, to help you start, have a start, to have an initial plan, let's say. So, guys, I'm gonna call it a date. The data, okay, had like a very brief reaction to the markets, but they haven't changed the overall outlook. They haven't changed even the day outlook. It's just dollar continues sideways, flat. So as long as it doesn't break our support it will continue consolidating, and looking that there is not a lot of pressure to break outside that range. So dollar remains flat, gold remains on the upside, gold rally, silver rally, euro dollar should be, yeah, okay, gain some ground, but this looks limited as well. So we might see a reversal soon. Yeah, let me see. This is a 30 minutes chart by the a 15 minutes chart and 30 minutes chart. So yeah, this is limited. So we might see it like reverting back to 116.50. Stocks in a rally. This is the S&P 500. This is the S&P 500. So haven't managed to extend above yesterday's highs. It retested it, but it didn't manage to continue above it. But it's positive. There was some like rally, even though it looks limited. It's looking like it's running out of steam already. Not quite sure yet, because I see that stochastic is flat. So that gives me the idea that we might not see further move higher. However, we still have new home sales coming out. And yeah, and Mr. Trump speaks tonight. So yeah, that might be just the limited rally. It might be just right. I mean, for the next few hours. So the next few minutes. Sorry. A break. What you should remember is that a confirmed move above 69.90 could open the doors to. Here you go. Come on. To new record highs, I'm gonna say, because we are already at record highs. So use some Fibonacci extensions, use your ATR to find new ceiling. Momentum is strong, to be honest. I mean, it's positive, is well above zero. But intraday, there is some limited rally. I mean, stochastic has flattened, and for 4 consecutive sessions in a row, it failed to extend above 69.90. So that gives me the indication that there are not enough bulls to push the market higher. That was from my side, guys. I'm afraid it wasn't an exciting day as I was expecting. I was expecting to be a bit, to have more volatility in general, but it is what it is. Sometimes we need to rely on our technicals. Most of the time, we need to rely on our technicals, actually. If you don't have any further questions, I'm going to call it a date. We are hosting our webinars in YouTube, but for you to receive the schedule and to receive the to receive the YouTube event, you need to register on our website or to register on the event. So visit our website, hfm.com, click on the webinars page, and over here you're going to find all our upcoming webinars. We have also a past webinar page, and there you're going to see the previous webinars that we have seen, that we have done, the recordings. So yeah, I think the recordings will be very helpful for you, my dear Joseph. Go hfm.com, click on the past webinars, is below the tools and education tab. Click webinars, and at the bottom of the webinar page, you're going to find the past webinar button, and you're going to see the webinars that we had for the last 5 years. So plenty to see. Yeah, thank you very much for being here. It wasn't an exciting news release, I'm afraid, but at least we went through the charts and we see the overall directions, the intraday, the long term, or the intraday, the short term, and the medium term direction for the main assets. So have a great day ahead. Take care. And we're gonna see you again next week with another live streaming from my colleague Mihalis this time. Thank you very much. Have a great day ahead. Take care. Bye bye.